What's going on out there, good people, and welcome back to LMD Trading, where I am living my dream trading. I hope everybody out there is doing well today, but more especially those fathers out there. It is our day, gentlemen. Happy Father's Day to the fathers out there. Hope your day is going well. As for me, mine is going good. Just been another typical weekend for me. On call for the regular job, so I don't plan anything on those weekends. I gotta go work at the airport tonight, and then I've been out in my shop pretty much all weekend getting orders done. So it's been one of them kind of weekends. The life of a go-getter, the life of a go-getter. But I always tell people it's a method to the madness. It is a method to the madness. But I am sitting down today to revisit a couple of videos that I did almost a year ago now. Didn't know that it has been that long. And those videos dealt with long-term investing. Long-term investing. And these videos I do primarily for the young people. Those are the ones that I really would see these videos, because it's something that wasn't imparted on me when I was young. So that's who I do these for. But there is never an age where you're too old to long-term invest. I always tell people that day trading is not for everybody. I understand that. When I first got into day trading, I was trying to push it on everybody. And as I got more involved in it, kind of saw that, nah, day trading is not for everybody. It takes a certain person to want to day trade. Long-term investing, everybody. Everybody needs to be in the stock market. And they make it too easy nowadays. They make it too easy. And one of the apps that they make it extremely easy with is an app that somebody mentioned in another YouTube channel that I watch. So I ended up checking the app out, and that app is M1 Finance. And it's what I have been using for this long-term account. I have other accounts with other brokers, but this one here is super simple. When I say super simple, it's just a set it and forget it type investment vehicle. You don't even really fund it. It kind of funds itself each week, each month, each day, however you want to set it up. But I just wanted to go back, look at the first video that I did, seeing where that account was at. I did another video about a month later. We'll look at those numbers, and then we'll look and see where that account is at today. And hopefully someone will see that this is the thing to do. I know one of the gentlemen that hangs out in the Discord, and I'm gonna kind of rub him on this video because I was going through looking at the comments, and he had made a comment on one of the videos, and he just set up his M1 Finance account. So I'm happy for that, because a lot of the people that hang out in the Discord are young. I'm the old head in the group, so a lot of younger people. I won't call them kids, but they're younger than my son, so I still call him a kid, even though he's a grown man. But let's go ahead. Let's jump on over to the videos, and I'm gonna just do steals for this first one. So this video right here was called "The Stock Market is Falling. Should we be long-term investing now?" This video was recorded 11 months ago. At that time, this account had $1,554 in it. The account was started March 28th, 2022 is when the account was started. At that time, it was red $245.62. That equated to a negative 20.76% return on this investment. Thing with that number is this is long term. This is minimum 5 years, preferably 10 years or more. If you're 20, this account might be a 20 or 30 year account. So what it's doing now is not really of significance as long as you have picked solid companies that you know will be around 30, 40 years from now. Now, do we know if a company will actually be around that long? We don't. Companies have issues and they go by the wayside, but there are staple companies that have been around for a long time. So that's the companies that I picked in my portfolio. By no means am I telling you to pick these same companies, but a few of the professional people that I kind of listen to on the tube, they say, go with companies that you're familiar with, companies that you use on a daily basis. So that is what I did. I used companies that I'm familiar with, that I use on a daily basis, or that I know will be around for a while. So this is where we were at when we first made the video. I'm going to go ahead and I'm going to click over to the second video that I did. This one right here was called Long-Term Investing Using M1 Finance, Learning to Invest/Trade with LMD Trading. This one was done 10 months ago. And I gotta rib my guy. Said, great video. Love how simple M1 Finance is. Might take a look long-term account with them instead of TD Ameritrade. He has an M1 Finance account now. Great. But when I did this video, account was at $2,224. It was green, $26.80. That represented a 1.98% return on our investment. I'm gonna start this video and let it play for about 3 minutes. What I'm doing with that account. So just kind of showing where the numbers were at. Hopefully it's going to scroll it down here in a minute. You see Tesla right there. Tesla was green at that time. Come on, keep going. There we go. So I'm going to pause it. We see Tesla was green. Amazon was green. We're just going to focus on the gains right now. Home Depot was green. Apple was green. SPY was red. ABBV was red. AMD was red, Disney was red, and INTC was red. So basically these four right here had pumped us back up and got us green. Again, we're not worried about the short term. We're not. Have to get that in your mind when you are long-term investing. You can't be worried about the ups and downs. I'm gonna go back to this one because I don't want to rewind the video, but right here, value over time, we're not really worried about these pullbacks because this is natural progression of the market going higher. That's what the market has to do. It has to go up and then it has to rest, and then it can go up higher and then it has to rest. As Jared over at Live Trader says, the day that the stock market goes down and it doesn't come back up from one of these, we got bigger things to worry about. We have bigger fish to fry when that happens, other than worrying about our long-term account. So now let's go ahead. Let's look and see where we are at today. This is 10, 11 months after where we were at on this video, where we were up in green, 2240. Market has been up, market has been down. And right now, the account has $5,810.06. Nothing has changed. I still put the same amount of money in the account. And correction, that is a correction, because on that second video, I did create another pie. So I'm gonna go apples to apples. Let's go apples to apples. That amount that was showing 2224 was for this account, the long-term account. So that account has grown about $2,000. Okay, got that out the way. We'll come back up and look at this number now, though. So we're at $5,810.06. Gain $289.99. It's a return on that investment of 8.75%. Something else that's important that I didn't mention from the previous videos was the market gain. What makes up this gain? So we got market gain, and then we have earned dividends. Earned dividends is when you just make money on the stock, whether it's going up or down. The stock just pays a dividend based on their dividend schedule. So we have made $58, almost basically 1% of the value has been paid out in dividends. And as you buy more shares in a company that pays a dividend, that dividend increases. So the object of the game 30 years from now is to be getting dividend checks that are just like a paycheck. When you're young, reinvest those dividends. M1 Finance, you can click and just tell it, reinvest the dividend, reinvest the dividend. But as you get older, you can start living off of that dividend. That dividend becomes actual income. So that's what this number here represents. It's split up right there. Again, the chart, you get pullbacks. You see right here, this would be what you call a consolidation. If this was a chart, I would draw a line right above these pivots. When that stock breaks that line, off to the races. Look at what the account did. So it's amazing how your account can actually look like an actual stock chart, because we were on a steady uptrend with little pullbacks. We had a consolidation right here, breakout, consolidation, breakout. We had a pullback. This is almost amazing. If I took a ruler, that pullback came just about to right there. That's kind of interesting how that works. But that's what the account did. Let's go ahead and take a look at some numbers real quick, because we are still red in some of these. So ABBV, we're red in. This one has fluctuated. It's been up green, big, and it's been down. This one is the highest paying dividend in the account. Same person who had turned me on to M1 mentioned this particular stock. So I'm ride or die with this one because of the dividend that it pays. Look at AMD. This thing is killer. This is a killer. Amazon, we're still red on. Not worried about that. I just had 2 shipments come in this morning from Amazon. Amazon ain't going nowhere, folk. Like, Amazon is making stores go out of business. Bed Bath & Beyond just went out of business. Brick and mortars going by the wayside unless they can keep up with what Amazon is doing. And if you look at Walmart, you look at Best Buy, you look at a lot of these stores now, if you go online, they're not just selling their items online anymore. They are selling third-party items. So these companies are having to compete with Amazon. So Amazon's going to be around. Apple, we green on Apple. I got an iPad on my desk. I'm using the iPad as my webcam. I got an iPhone sitting right here next to me. Apple's not going nowhere. Disney, I'm down on Disney right now. Disney, I don't believe is going anywhere. And actually, look at my shirt I got on today. People be talking about the font. Yeah, that's a Disney font. Living my dream. But Disney is not going anywhere. Mickey, he's not going anywhere. DeSantis is trying to give Disney World a run around, Disneyland, or actually Disney World here in Florida. But Disney's not going anywhere. Intel is green. Intel is major in computers. I got one in the computer that I'm using here. I got one of the chips in my laptop. They're not going around, not going nowhere. SPY, this is the 500 companies within the S&P 500. So if you didn't want to pick some individual stocks, you could just pick this one, and it has 500 of them up in there. It's green. Don't think that's going nowhere. Then we have Tesla. Tesla small red. Tesla had been down as much as 20-something% in this account. It had been down 20-something% in this account. If you weren't long-term investing and then you saw that, you would be nervous as can be. It's only down $8.63 right now. So again, long-term investing, thinking 10 years out, thinking 20 years out. Basically, when you don't need the money for the next 5 to 10 years. Older people, if you're going to be expecting to pull from this money in the next few years, then long-term investing might not be the best vehicle to put your money in. But again, this video is for the 20 to 30-year-olds more especially. But that was Tesla. Tesla is grinding right back up. And then last but not least, I got Home Depot. When I finish this video, I'm actually headed to Home Depot as a homeowner, because as homeowners, we know we always have to do something to these houses. So Home Depot is up 3%. Home Depot, I don't think is going nowhere. That's one of those staple stores. Home Depot or Lowe's. Those are the two stores that people use. The neighborhood Ace Hardwares, they are struggling. They are struggling. I still try to shop at one that's near me, but they make it hard. These big box stores can buy 20,000 items and sell it for a little bit of nothing. Ace Hardware can't compete with that when they're only buying 1,000 of them and they're not getting that same low price. So these big box stores are putting these little stores out of business, and I don't think Home Depot is going anywhere. So that is just showing what the long-term account is doing. I do want to pull up, I'm going to pull up a weekly chart on the SPY real quick, and then we're going to get out of here. We are going to get out of here. Let's see. This is 3 years. I think I want to take it. Let's see. Do we want to take it out 3? Yeah, 3 is good, I think. I think 3 is good. So let me drag this on over. I'm going to just do it like that. So 3 years ago, 2020, COVID. Actually, I will. Let me go back 5 years. Just to kind of show you what the market does. So this was 2018. It was trading at $272. It came up, it dropped, and then it grinded from 2018 up until 2020, February. Everyone knows what happened February of 2020, unless you were under a rock. COVID. And COVID tanked the market. And at that time, people were like, oh no, I got to get out of the market. Imagine if you sold when the market did this. Imagine. Just for it to ramp back up and break the high August of the same year, August 2020. Just imagine. And look at where it kind of bounced to. I'll just put my cursor right there. It kind of bounced right to that level. It's technical analysis. It used that as support, and it caught support, and it caught traction. And look at how beautiful my moving averages are stacked right there. This thing just runs. And it uses this moving average right here for support, kind of dips below it. We come over here to January of 2022. And we start a bear run, and it pulls back again, and people are worried and, oh, woe is me, the market is crashing, blah, blah, blah. All the time, I'm in the market now long term. I'm in it long term. I start this account March 28th of this year, or right here. When I say this year, I'm talking 2022. So I start buying right here, and I'm dollar cost averaging in, because that's what you do with M1 Finance. You pick what you want to buy, and then you tell it how much you want to spend each day, month, week, bi-weekly, whatever works for your bank account. So every week I was dollar cost averaging in as this was dropping down. While most people are scared, I'm buying. Kind of pulls up, I buy. It drops, I buy. It drops, I buy. You know, you see how we going with this? And then the market ramps back up. We get another flush. And now look what we have. We're starting another uptrend. So let's say I bought right here, and then I just never bought any more because the market was tanking. Oh no, I did it. I did a bad thing. Or let's say that I didn't buy right here, and I said the market is going to continue lower. I will buy when it bases out. It has to get back down here again. Look at what it does. It bounces. I never get that opportunity. So a lot of people will say, okay, we're in a downtrend. I'm going to catch the bottom. But is this the bottom? Nope, it came up. Is that the bottom? You never know when the bottom is. So if you long-term investing, just dollar cost average in every week, and in 10, 20 years, you will be wealthy. We won't use the word rich. We'll use the word wealthy. You will be wealthy, especially if you're 20 years old, 30 years old, because you got time on your side. I'm almost 50. I'm one of those people that I just talked about, that I'm going to come to that time to where I'm not going to want to be risking my nest egg. I'm going to be wanting to live off of my nest egg. Those 20 and 30-year-old people, 18 years old, you have nothing but time on your side. 18 and you invest for 20 to 30 years at 48, you get to my age. For one, if the stock market doesn't make you a dime gain-wise, just what you would have saved. Think about that. Just what you would have saved in the account. But the stock market is a vehicle to make money. It's not going to just let the money stay stagnant. It's going to do exactly what it did. Ramp up, pull back, ramp up. 10 years from now, this thing will probably be at $1,000 a share, because that's what the market does. If I took this back to, let's go 20 years. Do you get the picture? You get the picture? This thing back in 2008 was $67. Imagine had you started buying one share every week or every month in 2008. How many shares you would have, and each of those shares would be worth $439 a share. That is what I'm trying to get the young generation to see. And on that note, I'm going to go ahead and wrap this one up. Didn't think I would make it this long, but once I get talking investing, once I get talking stocks, once I get looking at these charts, I get passionate about it, y'all, because I tried trading probably 10 years ago, probably 15 years ago, but I didn't have the right mindset. And I'm just trying to impart that mindset in the people that are the age I was back then, to let them know. And one big thing, though, is back then, it was not as easy as it is today. That was one of the major hurdles back then. It just wasn't as easy as it is today. With technology, it's too easy. M1 is on my phone. M1 is on my desktop. You don't even need a computer, young people. You can load this thing right up on your phone because everybody has a phone. Everybody has a smartphone, and that basically is a computer in your hand. Go ahead, install M1 Finance. I'll try to drop a current link in the description. Go ahead, install that thing on there, set it up. If you want to study some companies that you want to invest in, and then just pick an amount. $25. If you can afford $25 a week, that is a start. Don't think that that is too small to actually get started with. That's what I'm putting. You notice that I had my long term, and then I had a grandkids. The grandkids won $25 a week is what I put in that account. That's an account that I started that I said, my grandson, he's 6 in 10 years. It'll be money in there for him to get a car. As long as he's doing everything that he's supposed to be doing. He won't have to worry about trying to buy his first car because Paw will have him squared away. That money will be in there for him. But $25, $50. If you can't do it weekly and you get paid every 2 weeks, have it come out on your payday. It makes it simple. Or once a month, whatever works for your time frame. And I keep saying this for the young people, but my G's that's around my age, it's still not too late. It's still not too late. You see what that account is showing since 2022. We're a little over a year, and that account has almost 6 grand in it. And I'm not putting a lot of money in there. This was just something that I started just to start doing. So it doesn't take a lot of money. And that's what I want to get through. It doesn't take a lot of money. Put what you can afford and then let it build. And if you can start putting more money in, it's as simple as loading the app up, telling it, okay, instead of $100 a week, I want to put 150. I want to put 200. I got a raise. Let me make that money make money instead of going out and buying some J's with it. So on that note, I'm gonna wrap this one up. Thanks for checking me out. If you hadn't hit that like button, please do so. If you're not subscribed, please think about subscribing. And as always, we can continue the conversation in the comments. My question is, do you think we are back in a bull run? Do you think we will see highs? On the SPY, I think we'll see 450, and then we're going to run into trouble. But a lot of these stocks, if you look at them on the weekly charts, on the daily charts, they break in all-time highs. Apple just broke its all-time high. It's blue skies, but the market is crashing. We're in a recession. Are we willing? Are we really? On that note, I'm up out of here. Market is closed tomorrow. I don't know what I'm going to do. We'll be back at it Tuesday. Peace.